Does anyone still care about becoming a millionaire in crypto? If the events of the previous 2 years in the crypto market have not affected your belief in making a fortune out of cryptocurrency, then you're on the right track. It's hard to find people who have not been swayed by the twists and turns of the market, with an assurance that they're on their way to claiming millionaires. Okay, since that is settled, what do you think about becoming a Cardano millionaire? Bitcoin is on everyone's lips. This is not a surprise though. Almost every crypto investor is in awe of the leading cryptocurrency by market capitalization, hence the popular opinion that the currency is winning big this year. Plus, many reports from various research firms and blogs are in support of this. In his Big Ideas 2024 report, ARK Invest unveils significant insights into the future of Bitcoin, suggesting an optimal allocation proportion of 19.4% within the global investment portfolio. This marked a substantial increase from the 0.5% allocation observed in 2015, indicating growing recognition of Bitcoin's role in the broader investment landscape. According to the report, allocating just 1% of the $250 trillion global investable asset base to Bitcoin could potentially drive its price to $120,000. However, the more notable projection arrives with a 19.4% allocation, predicting a potential price of $2.3 million. These figures raise eyebrows, yet they underscore the evolving perception of Bitcoin as a legitimate asset class. A tweet from ARK Invest CEO Cathie Wood read, "What's the big idea? ARK's research is full of big ideas that would transform our lives and inform investment decisions. Take a look at how quickly the 14 technologies around the ARK has centered its research and investments are evolving and converging in #BigIdeas2024. Highlighting key catalysts for Bitcoin in 2024, the report introduced a spotlight on the upcoming halving, expected in April. This event, occurring approximately every 4 years, historically coincides with the start of a bull market. The forthcoming halving will reduce Bitcoin's inflation, potentially influencing its value. Also, institutional acceptance emerges as a crucial factor, with ARK anticipating a shift in perception from viewing Bitcoin as a speculative instrument to recognizing it as a strategic investment in diversified portfolios. Recently, especially with the approval of spot Bitcoin ETFs, influential figures such as Larry Fink, CEO of BlackRock, has signaled a change in stance towards Bitcoin's potential as a flight to quality. This is proof that crypto experts and the market in general give so much credit to Bitcoin. Why then we didn't give the peanuts to Cardano? According to Dan Gambardella, founder of Crypto Capital Venture, who closely watches the metrics of cryptocurrencies, especially Cardano ADA, the current price dip is the most bullish thing that could happen to Cardano and the crypto market. In a video, he used the ADA USD weekly chart from TradingView to show how the cryptocurrency is forming a familiar bullish pattern. On January 27th, he uploaded a video where he explained that ADA had repeated its move in 2020 after the Bitcoin halving. He revealed how ADA established a swing high, retraced into a bottom before embarking on an extended rally. According to the analyst, the breakout by ADA coincided with Bitcoin breaking its bull market doors. Gambardella noted that he is anticipating the break of structure seen in 2020 to activate. He showed that ADA USD started a downward retracement, mimicking the move during the last cycle. He scaled down to the ADA USD daily chart and showed that bullish structure is still developing. Meanwhile, Dan Gambardella used historical data to show how ADA's current situation suggests a brief rally into the 50-day moving average region, and he expects the resistance to hold and ADA to drop, especially as the 50-day moving average has crossed above the 20-day moving average on the daily chart. Although Cardano's price structure follows the same pattern as its 2020 pre-bull run pattern, Gambardella noted that it's happening earlier, according to the scheme of events. Cardano's breakout pattern in 2020 happened after the Bitcoin halving event. This time, there is still a few months before the next Bitcoin halving, but the bullish signal is almost complete. Now, this is what makes the anticipation of a bull run interesting. The crypto analyst further noted that an immediate Bitcoin rally above the current swing high could trigger an early rally for Cardano. He thinks that if Bitcoin continues to rally from its current price, it could drag the rest of the crypto market with it. Therefore, the expected short-term Cardano rally could become a more established bullish trend, with a break above the 50-day moving average. It's important to note that Dan Gambardella has always taken a bullish stance on Cardano ADA. Sometimes, it is quite astonishing how he talks about the future of ADA with so much optimism, supported by reasonable predictions on the price charts. Last year, he took to Twitter to share with his followers that he's been building on Bitcoin and accumulating on Cardano. It's the ultimate crypto place. Lately, I've been building on #Bitcoin and accumulating on #Cardano. It's the ultimate crypto power play, he tweeted. In another tweet, Gambardella extended support for Bitcoin ordinals, saying that Bitcoin maxis were trying to cancel them in Web3, which was a disgrace to innovation overall. Okay, let's talk about the crypto package that got us excited in the first few weeks of the year. This is about the approval of spot Bitcoin ETFs by the SEC. They got approved, but the effects was not as extensive as envisioned. Was the ETF just a win that blew briefly just to make us feel good? It is reasonable to inquire whether the great crypto rally of 2023 to 2024 is over, since most leading coins and altcoins shot downward in price. Some of the more popular and once upwardly mobile altcoins weren't spared in the dive. Cardano declined at a 9% clip, according to figures from crypto exchange operator Coinbase. Data from S&P Global Market Intelligence showed the peers Ethereum and Ethereum Classic took even heavier blows, declining by a respective 18% and 15%. There is no doubt that we had just witnessed a buy the rumor, sell the news scenario, even though many claim that it doesn't always apply to investments. Late last year, the excitement over spot cryptocurrency exchange-traded funds began to build, reaching a cascade when a pack of them were approved for trading by the Securities and Exchange Commission. Were we warned? It seems so. Thinking aloud, why was the market in such a froth over these fairly wonky assets? Well, despite their fairly boring names, they represent a major development in crypto investing. Spot Bitcoin ETF is quite a big name though. But back to the main issue. We've seen this pattern before. Excitement builds for a new product or service on the investing scene, and once it arrives, the market moves on. Just like that. The increasing excitement over spot crypto ETFs was not the only factor behind the rise of Bitcoin and altcoins. Remember that an improving economic climate and the promise of Federal Reserve's key interest rate cuts also played a major part. Now that spot crypto ETFs are a reality and there hasn't been any major fresh economic news, it seems like investors are taking profits with some coin and token holdings. The market needs a break, and for many of its players, it's a fine time to take one. However, it looks like Bitcoin, after rising more than 150% in 2023, has shaken off the frost from the longest crypto winter on record. As great as last year was for the world's original cryptocurrency, 2024 is shaping up to be equally impressive. Keep hope alive should be the best comfort. There are a few reasons for this, but the most evident and potent is related to evolving supply and demand dynamics and historical patterns. Yes, history does not always repeat itself, but it does often rhyme, just like Dan Garbadillo's explanation about Cardano ADA. If something similar to previous years unfolds in 2024, Bitcoin might have what it takes to hit the coveted $100,000 mark, a gain of more than 120%. Besides, halvings form the foundation of Bitcoin's robust monetary policy and long-term value proposition, but they also have an impact on more immediate short-term price dynamics. While other factors affect Bitcoin's price, elementary laws of supply and demand play a major role. In the years that the halvings have taken place, prices typically increase as demand is compelled to compete for a more constrained supply. More importantly, demand doesn't have to increase for prices to rise. If demand does not change and at a minimum remains constant, the reduced growth rate puts pressure on Bitcoin's price. This has been the pattern for the last few years. During the year in which a halving occurs, Bitcoin rises on average 128%. While past performance does not guarantee future results, if a similar situation were to occur in 2024, Bitcoin could reach a price of around $96,000. That is close to the six-figure mark, but not quite there. On their own, halvings are significant events that alter Bitcoin's trajectory, but the halving slated for April 2024 will certainly be unlike any other. We expect altcoins, especially Cardano ADA, to follow this bullish trend and spike in value. While you might have thought that it was over, crypto is just getting started. But that's going to do it for today's video. Make sure you click on the subscribe and notification buttons, and we'll see you in the next video.